And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, traders. It is Thursday, October the 7th. I'm John Hoagland. Thanks for trusting me with your time. I'm very happy to be back with you this morning. I want to say thanks to Dan for covering for me yesterday. And looking forward to getting back into the markets today. I was a little under the weather yesterday. I wasn't feeling all that good. So feeling much better today. Thank you very much. Looking good. Feeling good. All right. As always, we're going to be looking at context, always thinking about risk management and infinite in our patience today. See, a couple of folks are mentioning they are green already this morning, so that's always a good thing. I always like to see that. We are here to see your success. As far as economic numbers this morning, 7:30, the jobless claims numbers came out a little better than expected. They were looking for 348,000 initial jobless claims, only 326,000. Continuing jobless claims looking for 2.78 million, 2.714 million continuing jobless claims. So maybe a little bit of a light on what's going to happen tomorrow with our unemployment numbers due out 7:30 Central tomorrow. So we'll be all focusing on that, I'm sure. The nat gas numbers due out at 9:30 Central this morning, and that's pretty much it for economic numbers, or at least known economic numbers. We had a really prime example yesterday of how headline risks or headline news can drastically change a market. We had the inference that they were going to be able to kick the debt ceiling further down the road, averting a damaging U.S. default on debt. I don't think they're going to let that happen. There's just a lot of political arm bending going on with regards to that. So we got that news yesterday, and that really changed a range-bound market yesterday to a ballistic to the upside market. We've left a late spike in the S&Ps and in the Nasdaq, so we're going to see how that late spike plays out for us today. We're going to see that in the charts here very shortly. Russia to the rescue. Apparently, they are agreeing or attempting to agree to provide more natural gas supplies to Europe, which is sorely in need of it. Crude inventory rises. It was a little bit of a surprise that now there's news that they may even open the strategic reserve. We did leave a island top day before yesterday, so we're seeing some pretty good reversal signals in crude oil, and I think that's a good thing for everybody who has to put gas in their car eventually. The President of the United States and the President of China, I guess, are agreeing to a virtual meeting by the end of the year, an attempt to thaw some of the chilly relationship, perhaps, that we have with China right now. Maybe we should have a chilly relationship with China. I don't know. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Taking a quick look at the VIX, the dollar index, and the 10-year yield. VIX down about 4% this morning. Makes sense. Equities are screaming to the upside. Still up above that 20 mark. In 2014, last I checked, dollar index 94.22, pretty much holding steady, and the 10-year yield also pretty much holding steady at 1.54%. I'm going to say good morning to everybody. I missed y'all yesterday. My brother Rick is first one in the room. Rick, you win the prize. Thanks for coming today. James, good morning. George, already seeing green. Theo, good morning. Brian, Daniel, Drew, Vince, a couple of my guys here this morning. Good to see you. Glad to be back with you today. Janus, Jurgen, DB. Yes. Hey, noticing that island top. Nice vision. D-beep. D-beep. Hopefully tomorrow I need gas, right, George? Frederico, Harry, good morning. Topped already, maybe. I hope that is the case. Laura, UG, Keith, good morning. NM, Michael, good morning, folks. Patience for those pullbacks today, for sure. Josh, Angelina, Spencer, Theodore, Ryan, good morning. NM, I'm glad to be back. George, Ryan, Zareen, Michael, Charles, Spence, chopped around a little. It's okay, as long as we're managing risk and we can stay in the game. Good afternoon. I missed you yesterday too, Ophelia. Focusing on tomorrow's announcement. Yes. Chris, Keith, Jason, Ryan, Alfred. What is the point of control? We will discuss that today. POC. I'm going to get that written down. Jimmy Decker, good to see you. Dr. VJ, Phil, Richard, JD, good to see you this morning. Ngabo, Andre, Anthony, good morning. Eddie, Cameron. Yeah. Well, for a while there last year, I was getting about 3 weeks to the gallon, but everybody's out moving around today, so... can you show the TPO for EES? I am going to show that today for everybody so we can see the late spike that we put up yesterday. Michael, good morning, everybody. If I missed you, I'm sorry. This is your first trip to the market forecast. Welcome. We're glad you're here. One thing I wanted to mention, because I was out yesterday, we missed our opportunity to have group coaching. Do I do it today or do we just wait until next week? You can just put a comment in if you want, and I can always... undelete the day and we can do it at the same time today, 1 o'clock, or should we just wait until next week? I'll let you guys comment on that, and I can bring it up and give you the link and everything by the end of the forecast this morning, but I do want to get moving on into the charts for us so we can see we've left the opening range at the low of the session in the crude oil. Let's go ahead and start with crude and see what we're looking at. Okay. Here's the daily. And we have been now coming off of our 7-year high here. See some pretty decent volume off that downside. Day yesterday, pretty decent volume. We added 11,000 in open interest, so it does seem as though people are coming into the short side here. Now, this is the day that we left the late spike, or excuse me, the island top. You're not going to see that on the daily chart. You're going to see it on the 30-minute chart as well as the TPO charts. There's always also a hint of tapping into the strategic reserve. So that's going to certainly change the fundamentals and has traders looking for more to the downside. What we've done here is we've put up a bearish engulfing pattern. So we did trade higher, we traded lower. We've basically engulfed the entire candle body from what is this? Tuesday, Wednesday, and bearish engulfing pattern. We've also got the island top. So there's a couple of different technical things that are saying that this is a likely reversal. So again, with that open interest, there's a renewed short interest coming into this market. Here is the 30-minute chart. Here's Tuesday's activity. We left a gap from Monday to Tuesday. We gapped from Tuesday to Wednesday, and that gap remains unfilled. I'm going to make it look a little bit more stark because I like to do this. Okay, there's our little gap. island top. So we are going to be looking at potential, now looking for opportunities to sell strength. We did leave the opening range at the low of the session today. Settlement is here, 77.43, and we've got a lot of overnight shorts in this market. These shorts are shorter time frame, weaker hands traders that if they're not going to find continuation to the downside with help from longer time frame traders, then they're going to try and eventually unravel those positions and bring us back to a level that might be a little bit more interesting to look for shorts. We have a gap here that we have yet to fill in regular trading hours, and we've got a couple of points of control on both sides of the market that have yet to be revisited. Now, what is the point of control? The point of control is in volume profile, it's the single price that has the highest volume. So here yesterday we can see the point of control is 77.60. That's the single price that had the highest amount of volume. In TPO, the point of control is the widest line of TPOs that's closest to the center of the range. It can be a little bit different than the volume point of control, but what it tells us is there's been a lot of transactions going on there. There's been a lot of time to complete transactions at those points of control. They're comfort levels, and those comfort levels are remembered in the minds of traders as areas that they were okay with. I don't like trading where everybody's okay trading. I like trading the extremes. I like trading where there's not a lot of time for us to execute. So now we've got our opening range of the low of the session coming back into range. If we come back into value, I'll be curious to see if we find acceptance back inside of value, which puts us maybe all the way up to yesterday's value area high before I'm going to be looking for opportunities to sell it. If we reject value and we reject range early in the session, that might be something that I'll also lean on to look for opportunities. The moving averages, the EMAs that are on this chart here, this blue one is a 20-session EMA. This red one is a 50-session EMA. Michael, to me, the point of the time frame for the volume point of control really shouldn't matter. It's the single price with the highest volume. As far as TPO is concerned, my TPOs are always 30 minutes. Always 30-minute points or 30-minute TPOs. So we can see yesterday's point of control here in the TPO is always the widest line of TPOs closest to the center of the range. And we can see that it's right here. It is, well, it's kind of hard to see, but it's 77.49. So a little lower than the volume point of control, but this is where the market spent the most time. It was the most revisited. It had the most opportunity for executions, therefore it is a comfort level, and traders tend to go to those levels. Hey, the infamous Felix Escobar is here. Yeah, it's like driving during rush hour. Yeah, absolutely. You know, the thing about it is, if you're in a range-bound day, if you're trading point of control, your risk is at the extremes. You're just expanding your risk. Now, there are times where trading point of control can be advantageous, especially in directional markets, if you get the opportunity. Sometimes they don't even give you that chance. Let's move on to the S&Ps now. All right, so we had 6 days of balance. We had a change in fundamentals yesterday, or at least a news change that eased traders' minds. It took one of the uncertainties and pushed it further down the line. So there's the encouragement that we are not going to default on our on our debts, and I don't think we were going to anyway. But now everybody's a little bit cheerier, thinking, okay, well, now we've got this thing taken care of, at least for now. I think structure is still to the downside in the S&Ps. We've broken a 6-day range to the upside, which is a good thing. Volume was pretty strong on this move to the upside, and we unfortunately didn't bring in a whole bunch of new open interest. Buyers, I don't think, were ready to come into this. It was more of a short covering thing yesterday, and now we're seeing possible new buying coming into this marketplace. Whenever we move away from an area of balance, we trade in the direction of the balance because we're expecting new buyers to come into this market. And so far it looks like that is the case, at least in the overnight. We're going to have to see what happens in the regular trading hours session. Again, I'm still looking at this as downside structure remaining intact, at least for a little while. Take a look at the 30-minute chart here. So we've got our rangy afternoon, morning, whatever it was, when the news came out that they were going to be doing something about the debt ceiling, and the market just really ripped to the upside. Did it really change much yesterday? Not really. We're still in the range. Now we're seeing a move in the overnight above settlement, which is 43.54 even. We've got a whole bunch of overnight longs in this market, weaker hands longs. If the buyers don't come in right off the open, remember we've got a gap to the upside. We've got a late spike where the late spike is showing. I'll show you on the TPO chart. So the late spike is here. Okay, the market came up here, didn't really get a lot of time to accept the time up here. That's what creates the late spike. So when we have a late spike, when we open inside or above the late spike, it marks acceptance of higher price. We're going to be opening well above that late spike. The overnight inventory could be used as a tool to bring the market closer to a level of weakness. Okay, perhaps a weakness in today's session, last night's session, to look for a better opportunity for continuation to the upside. So we're going to be seeing if we have any new business coming into the upside on the open. An opening range left at the low of the session might be indicative of buyer control, and that would probably help our weaker hands longs from overnight put their heels in the dirt and try and push this thing higher. Anything is possible. So basically, I'm looking at this as a gap with a late spike. I've got to be careful because there's a lot of overnight longs here that may push the market lower. Again, I'll be watching the opening range. If the opening range remains the low of the regular trading hour session, I'll be looking for longs early in the session. If it does not remain, I'll be patient, look for a pullback, and then see if I can find good trade location to the upside from that point. Take a look at the Nasdaq, which is in a similar situation. However, a little bit different. Yesterday in the Nasdaq, we had a decent upside volume and we added 5,000 in open interest. That bodes pretty well for a market state, which I believe is still largely to the downside, but we may get a lot closer to breaking that because we brought in buyers yesterday and didn't wait for today. Overall structure is still weak in the medium time frame, but that boost in volume and open interest on this move yesterday is encouraging, looking like longer buyers reacted sooner in the Nasdaq than they may have in the S&Ps. So we have a late spike in the Nasdaq as well. It looks like I failed to get the settlement price on here, but I'll pop it on here right now. 59. That's probably close enough for rock and roll. So late spike, gap away from the late spike, opening above the late spike, gives us the indication that higher prices are being accepted. But again, we've got a lot of longs in this market. If they unravel, it's going to give us better trade location for longs. There's nothing that says because of the late spike that the market has to just barrel to the upside. It can come all the way back, test the base of the late spike, which is here just below settlement, and then find buyers. If we were to come all the way back to value and accept inside value, that would be a bit of a surprise for us today, but anything again can and will happen. Acceptance inside value puts us all the way back down to the low of value at some point in the session today. I don't see that happening, especially with the late spike, showing acceptance of price above recent value. We're going to be looking for opportunities. It's going to be a little bit difficult to manage risk on some of these opportunities. Some of these opportunities may be bigger and may require a little bit bigger risk. So size down a little bit. Gold. Continued in short time frame control, imbalance, and showing a lot of indecision. Volume is maintaining. We added 3,700 in open interest yesterday, so it does seem like there is a bit of more of an interest in trading gold, but I'm not seeing anything all that directional and all that great today. I'm going to be looking now into the 30-minute chart, and before the regular trading hour open, we were just trading in value. We were just hanging around. No real overnight inventory. Settlement was 1761.80. Put that on your charts. I'm really going to be focusing on, for now, the extremes of the area of balance that we are currently stuck in. So I'm going to stay patient. We've got a little one-time framing activity coming down here. I wouldn't even think about looking at this until we test down to value low from a couple of days ago. We test down to these recent lows here. But again, I'll look for structure in the day time frame, in today's time frame, against these levels before looking for anything to stand in front of a market that is one-time framing higher. One of the biggest mistakes traders make is fighting a directional move. If this is the beginning of a directional move, I want to see it in the lack of structure that the market might be able to put together at these lows down here. Euro. All right, so we had a break out below the week that the bear flag that we were talking about on Tuesday. Yesterday we broke out below it, brought in some pretty decent volume, brought in 3,600 new open interest. Of course, a lot of this really depends on the dollar, but I'm seeing some bets being placed to the short side here, potentially in longer time frame. Dollar is hanging around and it keeps approaching the yearly high. We still have downside structure intact, looking for perhaps another test of this trend line, which we did yesterday, and perhaps a move down towards weekly kickoff low, which is 115.15, represented right here. 30-minute chart. So we got a pretty decent gap here. We've got, a naked point of control up here. Looks like we're really struggling to try and close this gap. We've opened outside of range. We closed the gap immediately, and now we see price back down towards settlement. So if there was any overnight longs, they've now reconciled, and we have a new opportunity in the fact that if we accept inside value from yesterday, then a move down to the value low from yesterday would be in play, but is it worth it? Is that value area big enough to take the risk? That's my question. Not seeing any evidence of acceptance inside yesterday's area of value at this point. So I'm going to just try and stay patient, see what happens throughout the day. We're in range, testing value from yesterday. All right. The 10-year Rates just hanging here at right around 1.5%. We got an inside extended trading hour range today. A little bit of indecision in the marketplace yesterday. We are currently testing weekly kickoff low, which is 131 and 16 seconds, about halfway there. And we have downside structure largely still intact. Just a little bit of range-bound activity here. Taking a look at the 30-minute chart. Where is it? Right here. So we've opened basically in range outside value. We seem to be rejecting value. I had a good feeling that the weekly kickoff low was certainly going to be in play. If we start building some volume down here, as it looks like we are, any move back towards settlement could be an opportunity for us to limit risk against that important inflection level. It's been tested below, tested 2 last night, now testing through. If we start to again build some volume down here, it would bode well for continuation to the downside. Of course, be watching the yield. If the yield starts to tick up, you might see some more continuation to the downside below this weekly kickoff low. And for the nat gas, we've got the 2014 swing high, $66.40. Tested it twice. We got some news perhaps from Europe that Russia is going to be providing them with some nat gas, so a little price pressure there. Is this breaking upside structure just yet? No, I don't think so. Pretty decent move to the downside on okay volume. Wasn't tremendous volume. We had some really good upside volume here. Yesterday's downside volume fell a little short of that, but we lost 25,000 in open interest. Okay, well, that's not a bad thing. That's just saying that some of our longs liquidated some of those positions, which actually takes selling power out of the marketplace. If some of those longs start to get behind the 8 ball here, they could actually help us push price even higher. Not suggesting that is going to happen. Now we've got the weekly kickoff high here, okay, which we left. We had kind of another weekly kickoff up here, which was that swing high. We're back inside of this. We're back inside of this range. We've had a couple of excursions up to this. Both have been rejected. Take a look at the 30-minute. So here's weekly kickoff low, kind of opening in and around range. We had a naked point of control that we have now checked in regular trading hours. Last week's low is down here. This week's low so far is down here. Again, I'm going to be kind of similar to what the situation is in the 10-year. I'm going to be looking for volume. I'm going to be looking for participation down below this level. And if we see it, what once was supportive may become rejection on the way back up towards it. So be patient today. Look for your opportunities, and always want to get done here. 2 minutes left. Well, I think what we're going to do is I'm just going to scrap the coaching session for today, and I apologize for not being here yesterday. I was under the weather, and we'll review the questions I already have on Wednesday, and this coming Wednesday, and we will catch up at that time. Maybe I'll add some time to it so we have more time to ask the questions. Again, thank you for joining me today. Best trading today. It is always an opportunity. It's always a pleasure to be here with you, and I look forward to all of your success. So we're going to hold off on the group coaching till next Wednesday. We will, well, Dan should be back this afternoon for the market recap. You'll see me tomorrow morning on Friday for the market forecast. Get out there and profit. Trade well today. I'll be in the pit looking for you in about 1 minute. Now, trade well. We'll see you later.